Nicola, let me go to you right now. What is the signal from the new low yields we're seeing in Germany, the new low yields we're seeing in Switzerland, and indeed around the world? What is the signal of that to Pimco?
Well, yes, Tom. I mean, what we are seeing in Europe is a significant slowdown. I think much steeper than most were expecting. We were below consensus, but even we have been surprised by the slowdown. And I think we have to recognize that there's some one-off factors in Europe that are distorting the data, like car disruptions in Germany, droughts in Germany, protests in France. But I think there's a deeper underlying slowdown, which is linked to global trade being weaker, that is leading an economy that has been growing above trend just for not long, going back to trend growth or perhaps even weaker. And so in this environment, with inflation still very low, I think we have to expect the ECB to remain very patient. We think in March they'll push the forward guidance out. The rate hikes will be pushed out. It's not even clear the ECB will hike at all. And so in this environment, bunds at 10 basis points look like a reasonable valuation with a curve that is fairly steep. It kind of makes some sense.
Richard, I'll come to you in a second, but actually, how distorted is a bond market right now, and when does that distortion end?
I don't think there are massive distortions in that, as I said, the ECB will be on hold for a long time. That's the expectation. And the term premium in the long end of the curve is quite compressed, and that's partly because of the fact that net supply of bonds is actually negative. I mean, the country is running a budget surplus. So I don't see it as particularly distorted. We think the valuations in bonds are fairly decent at this level.
Nicola, where do you see value in Europe, if anywhere?
So we don't see a huge amount of value in risk assets. As I said, we think duration bonds are okay value. When it comes to risk assets, we're quite careful because of the macro outlook and the political risk. So the situation in Italy remains fairly risky. We remain underweight in our portfolios, even though modestly so. We're underweight France, given all that's happening politically and even given the valuations. And generally speaking, we do see some value is in financials. We think that in some countries, and for some names specifically, there is value in some financial bonds. But generally speaking, we're cautious risk in Europe.